there are some little changes that you can make in your life today that can have a drastic impact on how much wealth you will achieve and when you will achieve this wealth in your lifetime. This is what I call the circle of wealth, inspired by the Lion King's circle of life. But in this, you get to choose if you want to be in the circle of wealth, and you get to choose where you progress in this circle of wealth, and where you choose to be is going to impact whether you're poor, broke, or extremely wealthy, and when you achieve that level of wealth. So most of the time, we don't grow up with any sort of financial education. So we're nowhere on this chart. We're just out making money, spending money, and we're just living our lives. But when you decide, I want to be better with my money, I want to be financially educated, I want to become wealthy, then many times we go through a circle of wealth just like this, where the first thing you realize is I need to start investing my money. How can I have money to invest? I spend less money. So we start here by being cheap. And what do? Well, you don't spend any money. You don't go out to eat, you live smaller, you cut out your expenses, and you don't spend any money. I was very cheap for very long because I did not know what to do or how to get to where I wanted to go. All I knew was if I didn't spend money, I'd have more money to go out and buy real estate as an investment. I'd have more money to invest in my business. That's all I knew. So I became very cheap. But that cheapness also came and bit me in the where, because I also turned down other opportunities that could have made me way more money. Because, for example, when I started buying real estate, I was buying at the bottom of the 2008 real estate crash. And I'm in Michigan, and in Michigan at the time, real estate was selling for 90, sometimes even 93% off. Meaning, you could find a home for sale for under $10,000. And they were in pretty decent areas. Like the first investment property that I bought this 1,000 square foot condo for $8,000 in a good area, next to a mall, next to parks, next to shopping. I mean, it was in a good area. And I started buying up real estate like this. And I remember when home prices went to $30,000, I was like, this is so expensive. Who in the world wants to pay $30,000 for a home? Who in the world wants to pay $50,000 for a home? Are you crazy? A 3-bedroom, 1.5 bath home for $35,000? Are you out of your mind? And I turned down so many deals because I was cheap. Now those same homes that were selling for $35,000 to $50,000 are now worth $200,000 to $300,000, maybe $400,000. Now I made good investments. I bought a number of properties. I made a lot of money during that time, but I was also really young. I had no idea what I was doing. I got very fortunate with the timing, but that cheapness bit me where I lost out of good opportunities because all I was looking at was the numbers. I didn't really understand how I could make more money. I just saw the number today and I was like, I don't want to spend this much money. It's too much money, instead of thinking a little bit bigger. And so what did we do in this situation when we're cheap? All we look at is the price. We don't care about anything else. All we're looking at is the amount of money it's going to cost me, and that's it. You're not looking at anything else. You don't care about what value you get. You don't care about what experience you get. You don't care about what money you can make. All you care about is how much it's going to cost me and how much somebody else is going to make, and that's it. All you're looking at is what you're going to get out of me and not what I'm going to get, and that is one of the biggest things that hold people back from becoming extremely wealthy, because you're so worried about what other people are getting in a transaction instead of looking at what you can get. And until you can progress here, you're going to be stuck in that level no matter how much money you're making. I know people, doctors, making hundreds of thousands of dollars a year that are stuck in this cheap mindset. And when you're stuck in this cheap mindset, you will never be able to progress. Sure, you make good money, you have a good salary, but you'll never be able to become truly wealthy until you can progress away from this cheap mindset. And I gotta say, my family's from a state in India called Punjab. Indian people are notorious for being cheap. And it is very hard to break out of this because you have this generational mindset of being cheap, where I'm not gonna pay money for anything. I'm gonna try to get everything for myself, nothing for anybody else. Well, I'm gonna tell you this, it's very hard to progress and become extremely successful. I'm not talking about a few $100,000 a year. I'm not talking about just being able to have a couple vacations. I'm talking about becoming actually wealthy. If you want to become actually wealthy, it is impossible to do that while being cheap. You got to be smart, but being cheap is a mindset game that's going to stop you from getting there. Then you progress onto the frugal lifestyle. This is where now you're cheap on some things, but you splurge on a few other things. So I became more frugal when I started to understand more about the concept of investing, and I started to realize, oh, I can spend more money on some things like my education, my investments, but I shouldn't spend money on other things. So in this stage, I was making, I don't know, maybe $100 some thousand a year. I was still really young, trying to understand the system. I was stuck here for a very long time, like years. I was stuck in this mindset. This was one of the hardest ones for me to break out of, because I got stuck in this idea of I don't want to spend any money on anything unless it provides me with value. And I was so stuck in this mindset that I remember I was wearing shoes. I was wearing these Nikes. I don't know how old they were, and they were duct taped, like, or masking tape. I would tape them because the whole flap, the bottom of the shoe, I gotta bring this on video because I still have the shoes as like a memento in my office at home. And the flap would just flap like this, so I taped it shut. And I would walk to class in these shoes, even though I had rental properties, even though I was making good money. I'm walking around with these shoes because I'm trying to be extremely frugal. And I cut back so significantly on everything. That way I could continue to invest in my business. Now, this is way better than here. This is a very profitable stage where you can be investing in the things that you're doing in your life. You can continue to understand what's important. I'm investing in classes. I remember I paid $3,500 for a class on wholesaling real estate, which was a ton of money for me at the time because I had all my money constantly being invested into my business and into real estate, and I didn't have a huge chunk of cash sitting there in my bank account. And to make the $3,500 investment here in this stage would have been impossible. I would have never paid $3,000 or $3,500 for some sort of education program, because the only thing that I would have said is, you're getting rich because of me. What am I going to get out of this? Some education program? I wasn't looking at it that, oh, I pay you $3,000 or $3,500 and I can make 30 grand or whatever. Well, in this stage, I finally understood that if I pay you $3,500, I can make more. And I did make many times more than what I spent, but it's a different mindset shift. But I then never spent on myself, and I continued to kind of have this cheap back thing in my mind where I knew I didn't want to spend money on a lot of things, and I only spent money on some things. But then, this is more of a recent transition where then I started to become more of a value spender. And this is where now you can really start to enjoy the fruits of the things that you're doing, and you can really start to become wealthy. And this, I mean, you can really start to become wealthy here. I mean, it's gonna be impossible here. But once you become here, now you can start investing in your wealth. But this is where you can really start enjoying your wealth in a smart way. Because now once you hit this value stage, this is where now, not only are you spending money on yourself, your business, the way you make money, your education, you're spending money on the things that will help you increase your income, that will help you increase your wealth. You've already done that. But now, you can make smarter decisions with the money that you do have on yourself as well. And what happens now is you'll find that the things that you spend on your value, I know this is not making any sense, but you'll understand in a second. When you spend money on this value, you're gonna end up making a whole lot more money anyways on the other side too. Like, I've spent money on conversations, I've spent money on random things which get me connected to people. For example, who in the world would spend $700 on a pen, right? I mean, it's a Mont Blanc. You don't need a $15 pen. You can have a 10-cent pen, let alone a $700 pen. And what I've realized is there's a market for $700 pens. Now, I haven't gone out and bought a $700 pen for myself. I have bought it for other people. But what I've learned is from the pens that I have gotten, because people have gifted me these $500, $1,000 pens, is there's a market for these pens. And people who have these pens are like a little community. So what happens? When you go see somebody else, you go to a meeting, and I have this $500, $700 pen, people ask you, oh, what kind of pen is that? Is that a Mont Blanc? People who understand what it is know what it is, and the people who do understand what it is have money too. Now, all of a sudden, you just made a connection with somebody who has money, who would have been very hard to make that connection with in the first place, and now you start to build more of these business connections because now you're investing in value. Now, this doesn't mean you have to go and blow money. That's absolutely not what I'm saying. Like, I don't spend money on designer clothes. It's not interesting to me. I don't like the idea of that. I haven't spent money on a fancy car. I'm still driving a beat-up car today because I'm investing heavily into my business. I'm investing heavily into my investments. Every one of my employees has a better car than I do. I'm investing more into my business than I am into my cars, but I'm looking at value. Anytime I spend money now, I'm looking not at the price, I'm looking at value. When I go to a restaurant, I want value. When I go and buy a nice car, I'm gonna look at the value, not the price. When I go on a vacation, I look at value. Like, when I go on a vacation now, I look at not just where I'm staying, but what type of beds the hotel has, which is such a drastic mindset shift from when I was here. Because I remember back in these days, when I used to go work in the wedding business, I used to work in the wedding business for a number of years. We used to go, and we were here. What did we do? Well, it was a few of us guys. We used to go and find the cheapest hotel room, because the wedding party who was paying for us to travel to this hotel, they might give us an allowance of $200 a night for a hotel. And so in our minds, if you're paying us $200 a night for a hotel, and we find a hotel for $39 a night, and we all share one hotel room, well, then we can pocket the difference. So what do? Well, all four of us, or more sometimes, would cram ourselves into one hotel room, sleep on the ground, sleep on the bed, sleep together, sleep uncomfortably, sleep in the chair, wake up with back pain, wake up without being able to sleep, and then go out and work. That's my cheap mindset. Now, in the value mindset, completely different game, where now we're calling the hotels to see what kind of beds they have. That way you can get a good night of sleep. I had no idea. I mean, this is kind of funny. I don't know why I'm going off on this tangent on hotel beds. But I remember I went to Embassy Suites. This is kind of where it all started a number of years ago. And I slept in this Embassy Suites bed. And I was like, this is strange. Like, this was comfortable. Like, I was with my wife now. And I was like, did you sleep good? Like, I fell asleep so fast. And it was just a weird experience. And she was like, yeah, it was the same thing. And we stayed at another Embassy Suites and it happened again. I was like, I've never slept this good in a hotel bed in my life. Then I started learning. Oh, Marriott's and Hilton's have a different type of hotel beds. And these type of companies have different types of hotel beds. And you learn that, oh, the higher end hotels have better hotel beds. You can sleep better. So now from a business perspective, when I go in and stay in a hotel, I want a better hotel bed. That way I can be well rested. If I'm well rested, I can work better. I can perform better. My health is better. I take better care of myself. It's a completely different mindset shift. Now, of course, I want to make sure I can afford whatever I spend. I'm not saying go and spend money on things that I can't afford. But it's a different approach. I'm not looking at the price. I'm looking at the value that I get. When I go out to a restaurant, there's a completely different level of service when I pay $200 for a dinner versus $25 for dinner. You get a different level of service, different level of experience, different value. Can you afford it? If yes, then there's a time and a place for that value. So now you completely shift the discussion of price versus value. And now I spend a lot of money on things that will provide me more value. Not just in my business, but in life. And this is where now you start to live a little bit differently. You start to enjoy money a little bit differently. And what's interesting is many times this ends up bringing more money to you as well. And then in this circle of wealth, sometimes you see people go from this value stage to the baller stage, where in the baller stage, you're just spending money to spend money. And this is where things get kind of reckless and they get kind of dangerous, because now people are spending money not because it's providing them value, not because it's giving them some sort of extra thing, not because it's getting them business connections, but because they can. And now you're spending money not just because you can, but because, well, you want to. And now you're spending money on things that not just that you can afford, but that you have to kind of stretch yourself to buy. This is where now people get in a lot of trouble, because now you become a baller. Maybe you've made good money at this point. Maybe you understood how to get away from cheap to frugal. Now you've invested in yourself. You learn how to make more money. You learn how to invest your money. You learn how to grow your money. You're making better money. Then you learn how to enjoy the value. You learn how to be smarter with your money. But then you kept going on and on and on to the point where now you're just a baller. Now you're going out and spending money, blowing money on things that, don't really do anything. You're making everybody else have a lot of fun with you. You're making yourself look rich. You have all the nice things. And this is what then triggers ballers to enter this again, because eventually you run out of money. And unless you can continue supporting your lifestyle, you can continue supporting your expensive habits, you're going to end up here again. Now, this is where you got to be smart and understand this is where the wealth is built. The wealth is built here. Wealth starts to become built here when you become frugal, meaning now you start spending money on value and you're not spending money on anything else. But then you start to earn more money, you start to become more wealthy, and then you realize that you can spend more money on value in general. Now you're going to look at other things that aren't a direct benefit, that aren't just your accountant, that aren't just your education, that aren't just your coaching, that aren't just your consulting, that aren't just the things that will make you more successful, more financially happier, but also on the side of the way you live your life, which will give you better connections and help you succeed and perform better in your day-to-day, right? Your fitness, your mental health, your physical health, your spiritual health, you're investing in yourself and your lifestyle. But then there's a difference between this living and the baller living, where now you're just spending money, having a good time, and making everybody see how rich you are. This is what puts people back here. This is where you want to be. And you don't have to go through this full circle. But you see a lot of people that go through this full circle, or they go through it with their families. You know, they talk about the whole 3-generation theory, where you work hard to become successful. Your kids might see how hard you worked, and they try to take it one step further. Their kids didn't see what you had to go through. They didn't see the struggles that you had to go through this and to become successful. So now what do? They're born into wealth. And no one taught them about the value of hard work. No one taught them the value of a dollar. So they start here, and then their kids start right back here, because now they have no money left for them. So this is where you want to be smart and understand, and this is where the wealth is built, and you want to be focusing here. Now, how do you do that, right? Well, the first thing is obviously being smart with your money, understanding what's happening in the markets, that way you can make better decisions with your money. If you want to know more about how to do that, you can join Market Briefs, completely free newsletter that I created to help investors and people stay up to date on what's happening in the financial markets. That way you can make better decisions. That way you can be more aware. That way you can understand how to use your money the right way. If you want to join Market Briefs, it's completely free, and you can join Market Briefs by clicking the link down in the description below. So now when it comes to actually implementing it, this is where it really goes back to your mindset and understanding the difference between a growth mindset and, well, everything else. Because most of us have this broke mindset that we grew up with this idea where there's a limited supply of money, there's a limited amount of success in the world, and if somebody else has money or somebody else has success or if somebody else achieves something, I can't. But there's so much money out there. There's so much success out there that if somebody else is successful, happy, has money, that doesn't stop me from achieving it too. And I can have a lot of money, and they can have a lot of money. And when you understand that, now you start to look at the world very differently. And now you can understand, oh, I can think a lot bigger and I can do a lot bigger, but it requires you to build that growth mindset and not be stuck where you are today. Because many times we assume that I make 50 grand a year, and if I want to put more money aside, I need to start from going and saving $10,000 and investing this $10,000 a year and start doing $15,000 a year or $16,000 a year. Now, what are you doing? You're squeezing pennies out of this limited pie. All you see is the 50 grand that you make today, but you're not seeing that. What if I took my pie from 50 grand to $500,000 a year? Because now if you take your pie from 50 grand to $500,000, well, now you can put aside a whole lot more than 16 grand. I mean, you could put aside $100,000 and still live a much better and a much bigger lifestyle. And this is that mindset shift that you have to start making and understand that it is possible. Is it easy? No, but it can work if you think that you can, and then you work towards that. It's not gonna happen next month, or maybe not even next year, or maybe in a few years. But if you start working towards that and you start thinking towards that, you're gonna start putting action in place to help take you from where you are today to a much bigger lifestyle, to a much bigger income. But you have to start thinking that it's possible, that we start doing something about it. Because if you just sit there day to day, keep doing the same thing, thinking, man, if only one day I can make $500,000 a year, but you're not doing anything towards it, well, you're not going to get anywhere. And so it requires a change in your action, a change in your lifestyle, and a change in the way that you live. That way you can actually achieve this bigger growth lifestyle, but you have to change your mindset first. That's why I always say your success starts with your mindset. You have to be wealthy here before you can be wealthy in your bank account. The divide between the rich and the poor keeps getting wider and wider, and this is where the majority of people complain about the system. But what I want you to do as a minority mindset thinker is to understand what it is that the rich are doing. That way you can start doing it too. And that's what we're going to be talking about in this video. What's up, everybody? I am Jaspreet Singh from theminority-mindset.com, where money minds rethink rich. Most people assume that if you want to become rich, what you have to do is either you're going to have to become a doctor or a high-paid professional, or you have to have this money just fall into your lap somehow. The reality, especially in our economy now, is we have so many high-paid professionals, doctors, engineers, attorneys, executives who make a big salary but are struggling financially. As soon as you make money, you have to pay half of this in taxes, and now you have to live off of what's left. And people expect that if you're a doctor or if you're a high-paid professional, that you have to look like a doctor or a high-paid professional. You gotta have that nice house, you gotta have the nice car, you gotta have those nice vacations, and that's why so many people who are high-paid professionals never have the opportunity to build wealth. The real reason why people become wealthy or don't become wealthy is not what degree you have, it's not who your parents are, it's not what job you're working, it's what you do with the money that you earn. I mean, we've made multiple videos on our channel where I talked about people who earn minimum wage. Maybe they were janitors or they worked at a parking lot and they retired with millions of dollars, while you have high-paid professionals that don't have a penny to their name. The one thing that differentiates somebody who becomes wealthy and can live the life of their dreams and somebody who cannot is your mindset. Because if you have the right mindset, if you have the right financial education, then you will have the ability to go out and take risks. You will have the ability to know what kind of risks to take, and you will have the ability to go out and do something with your money. That way you can go out and actually become wealthy. And that's why in this video, I'm going to be going over 5 lessons to understand what it takes to become wealthy. That way you can understand the difference between the rich and the poor mindset. But before we get into that, I need you to do me a quick favor and smash that thumbs up button below. And if you haven't already, be sure to join our free Discord community called the Guac Talk community. And we call it the Guac Talk community because, as we all know, extra guac is truly a symbol of extra wealth. And in this community, you can chat about all things minority mindset, from the stock market to the real estate market to the cryptocurrency market to all things building wealth. This community is completely free, and if you want to join our free Discord server, I'll put the link to where you can do that in the description below. The first thing that all wealthy people understand is the difference between an asset and a liability. Now, this might seem intuitive, but the reality is many times we don't understand what is an asset and a liability because the majority of people are buying liabilities thinking that they are assets. The way that I look at assets and liabilities is that an asset is something that puts money into your pocket, and a liability is something that takes money away from your pocket. The 3 biggest liabilities that the majority of people have that most people don't even realize that are liabilities are: 1, your house; 2, your car; and 3, your cash. So let's talk about these 3 things. Let's start by talking about your house. Everybody says that your home, the home that you live in, is your biggest investment. I mean, everybody says this. I'm a real estate agent, I'm a real estate investor, and I'm an attorney. So I've heard this from so many different angles. Every real estate agent is going to tell you that your home is an investment. Every banker is going to tell you that your home is an investment. The government is going to tell you that your home is an investment. So what do people do? Well, when people think that their home is an investment, they're going to go out and they're going to say, okay, I can comfortably afford a $300,000 home. But if my home is an investment, how about I go out and buy something a little bit bigger, a little bit nicer? So now you go out and you stretch yourself a little bit thinner, and now you go out and you buy a $400,000 home. And then as soon as you move in, you're gonna wanna renovate the kitchen, and then you're gonna wanna renovate your master bedroom, and then you're going to want to repaint the home, and then your furnace might break, you're going to have to pay for that. And then a few years later, your roof is going to start leaking, then you're going to have to pay for a brand new roof. And so most people's homes end up becoming a money pit, because now every single month you're paying for upgrades, you're paying for repairs, you're paying for maintenance, and this is something you have to do with your home. What I tell people is, if you're serious about becoming wealthy, before you go out and buy a home to live in, go out and buy a rental property, because when you buy a rental property, you're going to buy it for one sole purpose: to make money. The home that you're living in, you're not buying it to make money, you're buying it to make memories. And so now when you buy this property to make money, it's going to be paying you with cash flow every single month, and you can use this cash flow to now pay for the home that you live in. The first property that I ever bought was a small 1,000 square foot condo, and I didn't buy it for myself to live in. I bought it to rent out to somebody else, and after all expenses, after I figured out how to do the whole real estate investing thing, this condo was paying me somewhere between $250 and $350 a month in profit each and every month, and this is cash flow that I was getting without having to do anything. So I want to own rental properties if I want an asset rather than just a home, which is a liability. Now, don't get me wrong, there's nothing wrong with owning a home, and it's better to own a home than to own nothing, but there's so much more that you can do than just thinking that you need to take all of your cash and use it to buy a home, because your home is what is going to make you wealthy. Your home is going to give you generational wealth because you own your property. This is one of the biggest lies sold to the masses, because it's an easy way to sell you to go to your bank to pull out money to go buy this property that you're going to live in, and now this home becomes a money pit for so many people. The reason why I look at your home that you live in as a liability rather than an asset is because now anytime you put $1 into renovating your property, you have to do that with after tax dollars. So you make money, you pay taxes, and then you have a little bit of money left. Now you take this little bit of money left and you're going to put that into a new kitchen. Versus with a rental property, I make money, I spend money on renovating kitchens, and then if there's any money left, that's what I pay taxes on. So you're taxed very differently. Second, the cost for you to live in your home will always keep going up, even if you don't have a mortgage, because every single year you're gonna have to pay more money to maintain your home and your property taxes are always going to keep going up. And if you don't factor that cost into your income, well, then you could run into a problem where one day you have a fixed income, but now your property taxes go up, and now you can't afford your property even if you don't have a mortgage, because your property taxes are so much more than what they were when you first bought your home. And third, one of the most expensive costs are missed opportunities. Because now if you take all the extra cash that you have and you use it as a down payment for your house, and you take all the extra money that you have after the end of every month and you use that to renovate your kitchen, and you use that to renovate your bathroom, and you use that to renovate your bedroom, well, now you don't have the cash to go out and invest in opportunities that might come your way. And that can be one of the most expensive costs there are, because now you're missing out on all the other opportunities. That's why I want you to invest first and buy the liability second. The second liability that keeps so many people broke is your car. Now, most people understand that your car isn't going to make you money, but what most people don't understand is how much your car is actually costing you. Because the way most people look at their car is, okay, I'm going to go out and buy myself this nice $35,000 car, and it's something that I need because I need a car to get to and from work, and it might cost me $500 a month, and then you add in your insurance and your gas and your maintenance, maybe it's going to cost you $600 a month. And this is something that you hold on to for 5 years because you're financing your car over 60 months. But what ends up happening for so many people is 5 years go by, you no longer have a monthly payment, and then instead of keeping your car, you say, this is kind of weird, I don't have any monthly payments. So then you go out, you trade in your car, and you go out and buy a new car, and you start the payments game all over again. And so now for the rest of your life, you have this car payment because this is just what's normal. Everybody has a car payment, and every few years you flip into a new car and the payments start all over again. The real cost of your car is not just that $500 that you're paying to your car company and your bank every single month. It's the missed opportunity that you could be doing with that $500. Because now, if you took that $500 a month and instead of giving it to your car company and you paid yourself, so you use this $500 and you use this money to invest. I don't care where you invested, whether it's stocks or real estate, whatever, and you can just get an average 8% return, and you do this for 50 years. Now, after 50 years, your $500 monthly investment that you were given to your car company is going to be worth more than $3.5 million in your bank account. That's $3.5 million of missed opportunity that so many Americans are just throwing away because they're letting their car drive them instead of them being able to drive a car that they can actually afford. So what I want you to do is, instead of you going out and financing a car that you can't afford, go out and buy a car with cash and take that extra cash that you're no longer giving to your car company and you're no longer giving to your bank, and take that cash and pay yourself by investing this money into yourself. Now, you don't have to wait 50 years to start enjoying your money. It's just you using this money to pay for yourself, that way you're not buying a whole bunch of liabilities that you cannot afford. I want you to build your wealth. Build these assets first. Real estate, stocks, build the things that are going to pay you before you start paying everybody else. And the third biggest liability that so many people don't understand that is a liability is your cash. I grew up in a traditional Indian household. My parents are immigrants from a state in India called Punjab, and the traditional Indian mentality is a saving mentality. It's a save first mentality. And so I grew up being told that if I want to become wealthy, I need to get a high salary, I need to become a doctor, and then I need to save as much money as possible. But the reality, especially in our environment that we're facing right now, is that saving is losing. We are in an environment where money is printed like crazy. So the value of our dollars keeps getting diluted, and the value and buying power of our dollars keeps going down. So now, if you want to go out and buy something, it's going to cost you way more today than it did 10 years ago. It's going to cost you more today than it did 20 years ago. And this trend is not slowing down. So these dollars that you keep in your bank account, which are not growing, because if you go to your banker and you ask them what interest rate they're paying you on your savings, it's going to be next to nothing. So your cash is sitting there flat. It's sitting there dead while the price of everything else keeps going up. So the value of your dollars is dropping very quickly. So what you want to do is you want to take this cash that you have and you want to put it here. You want to spend as much cash as possible. And when the majority of people hear that, what they think is, okay, well, let me go to Louis Vuitton, let me go spend my cash. But let's talk about that for a second, because one of the richest people in the world happens to be the owner of Louis Vuitton. And the reason why he became wealthy and the reason why he became one of the richest people in the world isn't because he was going out and spending all of his cash buying name brand things. It was because a whole bunch of people want to look rich, and the way they're able to do that is by giving Louis Vuitton all their money. See, Louis Vuitton for him is an asset because people buy Louis Vuitton from him. But for the majority of people, Louis Vuitton is a liability. to take one liability and they convert it for another losing liability. See, what wealthy people understand is that your cash, your savings are never going to make you wealthy. Instead, you need to understand what to do with your cash. First, you need to have some cash for an emergency. You want to have somewhere between 3 to 12 months worth of expenses sitting there. That way, if something bad happens, if you lose your job or something happens to your car, you have some cash to fall back on. This is your emergency money. Second, you want to save cash for a big purchase. You want to buy a home, you want to buy a car. This is why you should have some cash to buy these things. And third, the last reason why you should be saving cash is to buy an investment. If it doesn't fall into one of these three things, you should not be saving cash. After you hit that emergency fund, after you have cash for whatever big purchase is, the rest of your cash needs to be going towards your investments. Now, that doesn't mean that your money has to be invested tomorrow. That just means this money is intended to be invested. So when an investment deal comes your way, you have the cash to invest. And so now what you're doing is you're taking this liability and you're turning it into an asset. What most people do is they take this liability, cash, and they turn it into a bigger liability, Louis Vuitton. Now, again, there's nothing wrong with having liabilities. There's nothing wrong with having a nice home. Nothing wrong with having a nice car. There's nothing wrong with having Louis Vuitton as long as you can afford it. That's what I want you to understand. Wealthy people build this before they build this. They want to let their assets pay for their liabilities. The majority of the world build this so they look right, they're rich and they have nothing here. I want you to understand how money works. That means build this and let these pay for these. The second lesson that every wealthy person understands are the different phases of building wealth. When somebody has that realization that, okay, I need to be better with my money, I want to become wealthy, I want to have this financial freedom, the first thing that everybody goes through is you go through the saving phase because you realize that, hey, I need to have some extra cash. And one of the most accessible ways to have some extra cash is to stop giving all your cash away. So now what you do is you enter the saving phase. You want to know, how do you save the most money possible? You become a penny pincher. You stop going out to Starbucks. You stop buying nice things. You stop going on vacations. And this is where the majority of people get stuck. They assume that you have to keep doing this forever if you want to become wealthy. They become penny pinchers and couponers for the rest of their life, and they never want to spend a penny because they want to become wealthy. But the reality is you will never become wealthy just by saving your money, because there's a limit to how much money that you can save. If you make $50,000 a year and you are saving 50% of your income, well, now you're saving and putting inside $20,000 and you're spending $20,000. If you want to be even more aggressive, maybe you can save and put aside $25,000 and you're living off of $15,000. Maybe you can live off of just $10,000 and you can save $30,000. But there's a limit to how much you can save. But there's no limit to how much you can grow. And this is where now you got to go to the next phase. You have to know how to live below your means. If you do not know how to live below your means, if you do not know how to save your money the right way, if you do not know how to spend your money here, you will never be able to become wealthy. Because if you're able to grow your income to $1 million a year and you don't know how to manage this money, well, you're not going to stay wealthy for very long. So you got to understand how to live below your means. This is the first stage of becoming wealthy. The second thing, and very few people come to here, is you need to know how to grow your money. How do you now grow the pie? Here you're thinking, okay, I'm making $50,000 a year. How much can I put aside to start building my wealth? Here you're trying to figure out, okay, how do I go from 50,000 to $500,000? Or how do I go from 50,000 to 5 million? You're trying to grow now. So you're looking for ways to invest your money. You're looking for ways for you to increase your income. You're looking for ways to grow the money that you have. That way you have more money. That way you have the cash to invest into things that are going to pay you with passive cash flow. That way you can have this sort of financial freedom. Once you get here, you're going to still be making a lot of financial sacrifices, because what you're going to realize is, hey, this making money thing is kind of fun. You're seeing how you can grow your money, and you're gonna wanna grow your money as fast as possible. So you're gonna be taking every extra penny that you have, and you're gonna wanna put it here. But eventually, you're gonna get to the point where you're gonna say, all right, I need to know how to spend my money. How do I get my time back? How do I spend my money in a way that's going to benefit me in the most possible ways? How do I get to live my life the way I want while continuing to generate this passive income? This is where now you have to know how to spend. Very few people actually make it to this stage. Most people get stuck here. They just start becoming a couponer, they start saving pennies, but then they never realize that a penny saved is just a penny, and then they never make it here. Then some people start growing their money and they realize, hey, this is cool. I'm starting to grow my wealth, but this is where you hear of people who die with millions of dollars but never had the opportunity to actually enjoy their money because they didn't know how to spend their money. So you want to understand this and then move here and then move here. Once you start to develop that wealth, you need to know how to spend your money in a way that's going to benefit you in the most ways possible. How do you buy your time back? How do you buy the most value in your life? And how do you start enjoying your life and enjoying the money and the wealth that you work so hard to build? Now you can start buying the liabilities. Now you can start buying the nice cars. Now you can start buying the nice clothes without worrying about it. But you need to know how to spend your money the right way, because you don't want to just blow all your money, because now you're going to end up broke again. And you don't want to spend no money, because why did you work so hard to earn this money? So you need to know how to spend, you need to know how to give, and you need to know how to manage your wealth once you get to here. The third lesson that wealthy people understand that the majority of people don't is that wealthy people have a growth mindset, while the majority of people have a limited scarcity mindset. This goes back to what I was talking about earlier. See, what most people do is they make this much money and this is their expenses, and they say, okay, I want to become wealthy, so I need some extra cash. So how can I squeeze my expenses down to here? So now I have only this many expenses and I can take this extra cash and invest it. But what I want you to understand is, yeah, you got to know how to do that. But the second thing you got to do is you need to know, how do I take this income and grow it to here? Now, you can have even more expenses, but you have so much more money that you can put towards your investments, because now we're working on growing the pie instead of just trying to figure out how to squeeze another penny out of the pie. One of the things that I like to say is that a penny saved is just a penny. So you got to understand that pinching pennies has its purpose. You got to know how to live below your means, but you got to think bigger than that. You need to have this growth mindset. You need to know how to grow the pie. And the reason why this is hard for so many people is because it requires you to think different, and it requires you to spend money. Like, one of the things that we do in our business here at Minority Mindset is we're always trying to think about how can we increase our expenses. The reason being is our goal is to increase our expenses so we can increase our income. When I talk to my friends who are newer real estate investors about real estate, one of the biggest issues that all of them have is, why should I be paying a property management company $100 a month to manage this property when there's really not that much work? The tenant pays rent every single month, and yeah, you got to pay a property tax bill, and you got to make sure that the tenant pays. But what's the big deal? Why can't I just keep this money in my pocket? And then when we're hanging out on Saturday evening, they get a call from their tenant saying, hey, something's wrong with the toilet, or hey, the shower is leaking. And now my friend has to go out and they have to call their contractor. Their contractor has to go to the property. The contractor is going to say, hey, it's going to cost me $350 to pay for this. Now you're going to say, oh, can you do it for $300? Now you got to deal with the contractor. The contractor is going to have to work with you as the owner to make sure that the job gets done. The tenant's going to be calling you, yelling at you because they're not happy about the time that the contractor went out there. Your tenant forgot to pay the water bill, so now you are the one that's getting the letter from the city, and you have to pay the city this back water bill if the tenant doesn't pay. And if the tenant doesn't pay his rent, now you're the one that has to deal with the eviction process. Or you can hire a property management company, pay them a little bit of money every single month, because they'll just take a percentage of whatever rental income that you're getting, and you can do none of that. And you can let the property management company deal with the headache, make sure you're getting paid, because they're experts at that. If you are a new real estate investor, you don't know the ins and outs of dealing with tenants. You don't know the ins and outs of dealing with contractors. You don't know the ins and outs of dealing with cities. And if this is what they do full time, every single day, all day, you might as well pay them a little bit. That way you get their expertise, and now you got your time back, and now you can use your time to invest in more properties and to grow your portfolio. Yeah, you got to increase your expenses every time you buy more properties, because now you have to pay them to manage more properties. But your goal is this: you're trying to grow the pie rather than just trying to squeeze a few pennies out of the pie. I don't manage any of my rental properties. I have a property management company that does that. They know what I want, they work with my goals, and they make that happen. And my goal is to do this. I'm trying to grow the pie instead of just trying to squeeze a few more pennies outside of it. The next thing that happens is people say, oh, well, that's easy for you to invest in real estate because you have the money to do that and you have the experience. I can't do that because I can't find a real estate property for less than $2 million. And so what are you doing? You're creating limitations for yourself. You're telling yourself that you can't do it. As soon as you tell yourself that you can't do something, I guarantee you will not be able to do it, because your mind has already turned off. It stopped looking for ways to do it. So what you got to do now is you got to start looking for opportunities, because I guarantee if you spent as much time looking for opportunities as you were being a cynic, as you were hating, as you were complaining, chances are you're gonna find a whole lot more opportunities come your way. So what you can do now is start looking for opportunities maybe outside of your city. Look in the outskirts, look in a different state. There's a lot of real estate opportunities outside of just one locality. So you gotta start looking in different places and you'll be able to start finding other real estate opportunities. The next thing people say is, I don't have the money to invest in real estate. How in the world can I start investing in real estate? Again, now it goes back to, can you find this growth mindset? Can you find opportunities? The majority of people are going to sit there and complain, but you want to be the person that's finding the opportunities. When I realized that I wanted to be a real estate investor, I jumped in with both feet. I started going to real estate seminars. I joined the local real estate investor meetup in my area, and so I would start to go to these monthly or bi-monthly events. I became a real estate salesperson, and because I became a real estate salesperson, I got to meet a whole bunch of other real estate agents, and my real estate broker happened to be somebody that taught real estate investing. And so I got to know her, and so I started to get it out there, and I started to meet as many people as possible. And when I realized that I didn't have enough cash to want to buy properties because buying real estate is expensive, that's when I started looking for new ways to start generating cash. And at one of the real estate seminars that I attended, there was a couple people talking about this way that you can buy real estate with no money down, but you're not actually buying real estate. You would enter into the contract to buy a property, and then you would flip the contract to somebody else, so you have no risk, and you could walk away with a decent chunk of change in your pocket. So if there was a home on sale for $100,000, you would enter into contract to buy it for $90,000, and then you would turn around and you would sell this contract to buy the home to somebody else for $97,500. So you enter into a contract to buy it for $90,000, you sell it for $97,500, and now you sell the home, you keep the $7,500 difference, somebody buys a home for below market value, and the person that has a $100,000 home is happy because now they can finally sell the property. They've probably had the home listed for a long time and they haven't been able to sell and they need to sell, and now they finally have somebody to sell, so everybody walks away happy and you get to walk away with a big check. When I started learning about the system, I got really intrigued. The problem was, if I wanted to learn how to do this in more depth, I had to pay the teachers $3,500. And that was a lot of money for me back then, but I wanted to invest in myself. Remember, I wanted to increase my expenses, that way I could increase my income. So I invested in myself, I learned how to do it, and then I started doing this exact same thing. It's called wholesaling real estate. It took me months to get my first sale, but I made my money back many times over, and this was now cash that I could start using to buy more real estate. If you're not willing to invest in yourself, maybe it's to hire somebody who can help you grow, or maybe it's to go to a seminar, or maybe it's to buy a class, or maybe it's to buy a book. If you're not willing to invest in yourself, nobody else is going to be willing to invest in you, and then you're going to be limited right here. You have to develop this growth mindset, and you have to be willing to learn from people who are already doing it. And a lot of times it's going to come at a price. So you have to be willing to invest in yourself, invest in your own education. That way you can grow the pie into something bigger. See, the majority of people hate the idea of somebody else making a profit off of them, so they make it their mission to make sure that nobody profits off of them. I love it when people profit off of me, because if someone's profiting off of me, that means I'm getting some value. I like buying things that give me value. And I have no problem if somebody's profiting off of me as long as I'm getting some value in return. And so what I'm looking for is not what the cost is, I'm looking for the value that I'm getting in return. And this is the difference between somebody who becomes wealthy and somebody who stays broke, because if you're always worried about somebody making $1 off of you, you will never have the opportunity to go out and make $2, because people are so worried about losing $1 that they miss out on the opportunity of making $2. So what you need to do is you need to start developing this growth mindset, and instead of just looking at the price that you have to pay, start looking at the value that you're getting, because what you want to start doing is you want to think about how you can grow your pie instead of just trying to squeeze a few more pennies out of your pie. Now, before we move on to the fourth lesson that wealthy people understand, I want to remind you that if you are interested in learning more about money management and investing, we have a free guide on money management and investing that will walk you through the things that you need to do with your money. That way you can become wealthy. We'll walk you through different investing strategies, how to invest your money, and how to build your wealth. This guide is completely free when you sign up for our daily newsletter. So if you want to read a free guide, I'll put the link to how you can download it in the description below. The fourth lesson that wealthy people understand that the majority of people don't is the correlation between money and happiness. See, the majority of people put up the smoke screen because they don't have money, they don't understand money, so they say things like money doesn't matter, money can't buy happiness, you shouldn't worry about money. These are the things that I grew up hearing. But at the same time, I would see my parents go to work every single day. They would go early in the morning, they would come back late at night. I barely saw my parents when I was growing up because they were always working to make money. And this is where things didn't make sense to me. If money doesn't matter, if I shouldn't talk about money, if I'm not allowed to talk about money, why in the world are you going to work every single day just to get a paycheck? See, the first thing that you have to understand is that money itself is just a tool. It's the tool that you use to pay your bills. It's the tool that you use to fund your vacation. It's a tool that you use to live the life that you want. Money itself is not going to make you happy, but money is something that is important for you to be able to live your life, because most people are scared to say that money is important. But the reality is, if money wasn't important, you wouldn't have so many people miserable at jobs they hate, going home telling their kids that, hey, you shouldn't worry about money, just go to school, go get a degree, and go be miserable earning a paycheck doing something that you hate because money doesn't matter. But the reality is, money matters. For so many people, if you didn't have to stress about your bills, if you didn't have to worry about how you were going to fund your kids' education, if you didn't have to worry about how you're going to pay for your next vacation, if you didn't have to worry about how you're going to buy that gift that you want for your spouse, your life financially would be a whole lot easier. Now, the thing that you have to understand about money is that money is just one aspect of life. We talk about money quite a bit on our YouTube channel because, well, we teach financial education. So we focus on the money aspect, but there's a whole lot more to life than money. And you have to remember that. And you need to know how money plays a part in your life, because a lot of people get this confused. They assume that, hey, I'm miserable, I have no friends, I hate my life, but if I have $1 million, I'll be happy and I'll be able to live my dream life. And then if you ever achieve that million, you're going to realize that now you're more miserable than you were before, because now you thought that you did what you needed to become happy, and now you don't have that happiness, and now you're going to be even more miserable. So what you need to do is you need to know how money plays a part in your life, that way you can enjoy the wealth that you have, and that way you can use your money to amplify your happiness. There's 4 aspects to life. I call this my quadruped theory, that you have to know how each aspect of your life fits on top of one another. At the bottom of this quadruped triangle is what I call physical fitness. You have to be physically healthy. If you are on your deathbed, you don't care if you have $10 million in the bank. The only thing you want to do is be healthy. The only thing you want to do is be able to breathe. The only thing you want to do is to be able to go outside and walk again. So if you are not physically healthy, that's the first thing that you have to take care of. Because if you don't have the ability to breathe, if you don't have the ability to live your life, well, that's going to hold you back from doing anything. So you need to make sure that you're physically healthy. Then you need to make sure that you are mentally happy. So this goes to, who do you have around you? What are you doing? Are you happy right now? Because if you're depressed when you're worth $10,000, suddenly having $1 million is not going to make you not depressed. You got to take care of your mental health, and you got to invest in that. If it's going to take you $20,000 to go into rehab to get your mental life in order, go and do it. Because that's the cost that you will never be able to fix just by having more money. You need to take care of your mental health. And if this is not something that you're taking care of right now, it's not suddenly going to be fixed when you have more money. So you got to understand, you got to be physically fit, you got to be mentally fit, and then you need to be spiritually fit. Spiritual fitness doesn't mean religion. This means, what is your purpose? What is your reason for waking up in the morning every single day and wanting to conquer the day? If you don't love what you do, if you don't have a reason to get up every single morning, it doesn't matter if you got $10 million in the bank. You have no reason to get out of bed. You need to have a purpose. What is your reason for getting up every single morning? This is the reason why you're living life. You need to know this. And then once you have these 3 things, this is where financial fitness comes into play. Now, once you have this, more money can just amplify your happiness. You need to understand that money is just a tool. Money is just here, but if you don't have money, it can ruin everything else. If you don't have money, well, now it can be a lot harder for you to be spiritually fit, because you can't do what you love, because you gotta keep going to work every single day, making money doing something that you hate. If you don't have money, it can ruin your mental fitness, because now you're stressed about your bills. You're stressed that you cannot give your wife or your husband what they want. You're stressed that you can't pay for your kids' college. This can destroy your physical health, because now you're eating at McDonald's every single day. If you do not have money, it can destroy all of this, but you can't have happiness without all of this. So you need to understand how money plays a part in your life. Money is just a tool. It doesn't make you a good person, it doesn't make you a bad person, but you need to understand how money works and how money plays a part in your life That way you can use money to amplify your happiness. And the fifth lesson that wealthy people understand that the majority of people don't is how the wealth ladder works. See, the majority of people are focused on the corporate ladder. They want you to climb the corporate ladder, which looks like this. At the bottom, you have your laborers. These are the people that are your janitors, your cashiers, your blue-collar workers. These are the people that are earning close to minimum wage, your laborers. Above that, you have what I call your workers. These are the people that go to college and you have a nice college job. You might be an analyst. You might be one of those people that's making, your decent living. You have a good job. And now if you have this good job and you keep working up the ranks, you will make it up to the executive level. Now, we're talking about the big bucks. You're the one that's helping make the decisions for the company. You're the one that's thinking about how the company works. Your job is now to think instead of just to work and push papers. This is what most people think about when we talk about the corporate ladder. You want to go from just your laborer to a worker to the executive, to the thinker. Because what wealthy people are trying to do is they're not trying to climb this corporate ladder, they're trying to climb the wealth ladder. And so they understand what's going on here, but what they really want to do is they want to be this person right here. They want to be the owner. They want to own the corporate ladder. Just take a look at Coca-Cola. Who is the highest paid person by Coca-Cola? And most people are going to think it's the CEO, but that's not true. The person who's making more money than the CEO is the owner of Coca-Cola. In 2021, the CEO of Coca-Cola will make something around $17 million. A lot of money. His name is James Quincy, and he's gonna make a lot of money because he runs Coca-Cola. He made it all the way up here to the executive level. But the person who's making more money from Coca-Cola than the CEO is the owner, someone like Warren Buffett. He owns a lot of Coca-Cola, and in 2021, he will make something like $650 million in dividends from the Coca-Cola stock, and he didn't have to work a day at Coca-Cola. He didn't have to go out and manufacture any Coca-Cola. He didn't have to go out and tell the workers what to do. All he did is over the years, he owned and accumulated as many shares of Coca-Cola as possible, so he became one of the biggest owners of Coca-Cola, and because of that, when Coca-Cola pays out their dividends, he gets the big checks, and he's not the one that's going to work every single day to run the company. So what wealthy people are trying to do is they want to become the owners, not just of companies, but of assets. We talked about this in the first part of this video, assets versus liabilities. Wealthy people want to be the owners. They want to own the means of production. They want to own the assets. That might be owning businesses. That's what Warren Buffett does. But you can also own real estate. Real estate can pay you with cash flow every single month because if you have an apartment complex, now these tenants are going to be paying you rent to live in your property. So there's a lot of different ways that you can be an owner. You can go out and you can own other businesses that you don't have to work in physically. So you want to be the owner, not just the person climbing up the wealth ladder. Now, there's nothing wrong with working a job. Not everybody can start their own business. But what you need to do now is you got to understand, okay, if you're working to earn more money, why are you trying to earn more money? Most people want to climb this corporate ladder. That way they can go out and buy a nicer car, they can buy a bigger home, they can go on more vacations. I don't want you to think like most people. You need to think like the minority of people. When you're climbing the wealth ladder to make more money, the reason why you need to be making more money is so you can take this more money to buy more assets. When you buy more assets, these assets are going to be paying you more money every single month, and then you could take this more money that you're making from your assets to go out and buy more liabilities. So you need to know, why is it that you're earning more money? This is where so many people get it confused. So you got to understand the game. You don't want to be the person that's just climbing the corporate ladder to earn more money, to buy nice things. You want to be the person that's working hard to earn more money, to own more assets.
Now this shows you how naive I was with the lack of financial education that I had. I thought it was free money. I didn't know that this money had strings attached to it. I didn't know how to pay the money back. I didn't know that I was being charged interest. So what happened was I traded money.
I don't know if you've heard, but there's a guy named Jaspreet Singh, and he says the most expensive money is free